watching famous Dave. You're watching famous Dave.
All right, everything is screwy this morning as we come into the day. Welcome to the Short Vol Show Live. My name is David Lincoln, and it appears that my whole setup, I think what happened is that something updated, and it switched on automatic start streaming. So as soon as I launched my screen here, I was already in front of you streaming, which was new to me at the moment, and other fun stuff. I think this is. I have to apologize. Last time I came on later in the day, I was using this streaming software for something else, and it just started broadcasting to YouTube. So go figure. Anyways, welcome back to the show. We have, it looks like an uneventful open coming up as we approach 9 o'clock in the East Coast of the U.S. right now. I'm going to actually take this link and post it to StockTwits while we're talking now and see if we can get more people to come into the chat here. But the story has been the same for me for the last actually few months, in that my focus has been away from the VIX and more on these meme stocks. And more specifically, I've been playing the short side of the meme stocks over the last couple of months, and it certainly did not work at first with, as most people know, the real spikes in Gamestop and AMC and whatnot. But as time has gone by, these have seemed to have kind of started to fade, and the position started working out a little bit better. So that's been good news for the position here, and hopefully that continues to be the case, because I've stayed short for a while now as I'm attempting to post this. Oh, well, I'm going to give up on that too. Anyway, let's take a look at some charts here, and I wanted to do what I did in the last presentation, which was to discuss this unusual activity feature that appears sometimes in the newsfeed for Thinkorswim. So let's take a look at that, and we'll discuss. I want to do a little position update for GameStop and how trading's been going on in that, and then we can look at the VIX for a little bit. So let's first take a look here. We'll pull up the screen, and let's take just a brief look at the markets as we see stuff unfolding right now. And if I go to my watch list here, and it looks like Robinhood has actually come back a little bit since last week's IPO. Robinhood opened at 38. That was where the initial listing was, and proceeded to pretty much tank a little bit right after that. You can see, actually, these are the only 3 trading days so far. You can see closing the first day 34 and change, then hit a low of 33, and it's sort of climbed the next day. So we'll see what happens from here, but it is threatening to actually eclipse its starting price. Now, there is some pushback against this IPO in social media, with people upset with Robinhood's policies regarding the meme stocks. And if you think back to January and February, they did limit the trading of some of the meme stocks during the big short squeeze in GameStop. And this put Robinhood in a bad light for some people. And there certainly was a contingent of Reddit that was trying to make the initial public offering less successful. Now, how much influence Reddit has on the market, it sort of ebbs and flows over time, it seems. But Robinhood looking to actually go higher than its initial public offering price of 38 today. We'll see if that happens. What are my thoughts on Robinhood? It's interesting. We've talked a little bit about this before, but Robinhood allows free trading of stocks. And the way they're able to do that is, of course, through payment for order flow. They sell their orders to other firms, and thus they make money off of selling their orders. So that's kind of how that works. It's kind of like in the social media world, where if you have a lot of views, there's power in having that audience with a lot of views. Well, same thing with Robinhood. If you've got a bunch of stock orders, there's some power in that. Now, I mean, if you think of it just in very basic terms, if you've got, 5,000 people trading GameStop, then there's going to be in that group of people, there's going to be some buyers and some sellers, and you could almost match them up privately, and take a little profit in between. And we've talked about this before, but Robinhood certainly has a high percentage of newer traders, and some of these orders are very desirable because they're small orders. A lot of them are market orders where somebody is not limiting the price of where they're trading, and thus this order flow is valuable, and that's how Robinhood is able to offer free trading. We'll see moving forward what goes on with Robinhood. I know there's been comments of the company saying that they, like many of these brokerages, are involved in the crypto world and are depending on the crypto world for a certain amount of their income. So I want to look for a second at this unusual options activity in GME kind of column that they have in Thinkorswim. So if we go here in Thinkorswim to select a gadget on the right side here, on the left side here, and we pick live news. Now I'm going to link, this should be linked already, but sometimes these links kind of fall off somehow, but so you can see I have this red link here that says 1 is also linked up here to my stock list. If I expand this, you can see the red link on the top here too, right here. And thus, when you select a security on the left side here, it should pop up both the chart here on the right and any news stories. So if I go here and select GME, then it pops up the chart and the news stories. And this is what I wanted to look at from yesterday, analyzing GameStop's unusual activity report. We've done this before, but let's take a look at another one here. Now, these are notoriously not very helpful. Well, let's take a look at this particular one. Okay, so on Monday, shares of GameStop saw unusual options activity. After the options alert, the stock price moved down. Sentiment bearish. Options type trade. I don't know what other options type there would be in there, but anyway, trade type put. Expiration date 8/6/2021. So this is a front week option expiring in a couple of days. Right now we are on the 3rd, and this expires in 3 days on the 6th. Strike price 140. Volume 2675. Open interest 1393. So we can see from here that the open interest is lower than the volume there, right? So that means that this must be opening to some extent. However, when I did a little bit more research in this trade, if we go and we look at the open interest now, this is from yesterday, but if we go and look at the open interest now, and the way I'm going to do that is I'm going to go to an option screen here, and this middle column here, we're currently displaying size with the bid and offer, theoretical price and position. I'm going to switch that to volume and open interest so we can see the open interest. And we'll go to that particular option. So it's the 140 put in August, 6 expiration. And we can see right now the open interest there is 1,603. Okay, so what do we know so far? We know that the initial, we know that we had this alert that 2,600 traded, and before that, the open interest was 1,300. And we know that after that trade, the next day, the open interest is 1,600. So, from that information, it appears that somebody reversed out of a trade, right? It appears that they went from being short to long or long to short. They sold out whatever they were. Let's say if they started out long this option, the 140 put, they sold out the ones they owned and they reversed out of them, right? So when we see the volume of 2675, it's twice the volume of the open interest. So it appears that, and we know that afterwards, the open interest was lower still than that volume. So it stands to reason that this was a closing trade that closed out whatever volume this was, closed out this open interest, and reversed, did the same amount again to the other side, because that would make sense as to why the open interest now is only 1,600. If they had just added to it, if they just, if this was completely opening order on the same side as the open interest, then we would have a higher open interest now than 2,600, right? We'd have like 2,600 plus 1,300 plus some additional amount. Now, obviously, there's going to be other trades in this strike today, but this is a significant volume compared with the open interest, right? It's like double the open interest. So it looks like somebody closed out a position and then reversed it. So if they were long these puts, they sold the puts out and then sold more. If they were short the puts, they bought in what they were short and bought another additional amount more. We can't really tell exactly what they did, but and that's why this options trade is not very helpful to us to determine direction, or we don't know if this person was right either. But let's take a look at this option. Okay, so right now this 140 put is trading between $1 and $1.25. Let's see if we can go to barchart.com and see if this trade was reflected at barchart.com as well. Let me quickly try to check that out here. So if I go to barchart.com and I look up options, I'm not sure if it would be under just unusual activity, but let's just look under GME and see if anything pops up here. I'm not allowed to select an option. I'm not allowed to select a specific stock unless I buy the thing, so I guess we won't look at that. But it doesn't happen to be in here, which is not surprising at all. It doesn't happen to be here in the top, I don't know, how many is this? The top 100 unusual trades in bar chart does not include this one that was highlighted in Thinkorswim, which isn't surprising because the Thinkorswim is such a random thing the way it picks these trades. Let's see if it's in the top 200. It doesn't appear to be in the top 200 trades. Let's see if it's in the top 300 trades. Can I sort these by alphabetically? It looks like I can sort them alphabetically. Let's see if we can get a G here. And here we go. So GME. So we had here's a 140 put. And this, all right, so here we go. This one has 1,995 trading, which is, this could have been part of that trade. And let's see what price this has them trading at. Bid ask last. Let's see, 140 put right here. So it's not clear where it doesn't tell us what price this trade traded at. That would be interesting information for us, right? Because then we could maybe tell if it was on the bid or the offer. But we don't have that information. I would speculate just from looking here that maybe this person was short these puts and that they sold them at a higher price. They collected a bunch of money, made a bunch of money off them, and now they're reversing and spending a portion of that money that they made being short these, getting long them. It's kind of like you're playing with a house's money. Let's say they sold these puts for $5. Now they bought them all back for $1. So they have $4 profit. If they buy an additional amount for $1, they still have $3 profit, but they're buying a lottery ticket with some of their winnings. That's what I speculate is going on here with this particular trade. I'm trying to see if I can look at time and sales and see if we can pop up some stuff from yesterday here in time and sales. It doesn't like what I'm doing here. And it wants me to relaunch everything. All right, so we won't do that anymore. I'm still here as we relaunch. So that's the story. The position's been working out really well for me in GameStop right now. Still short. I'm short via the 180, 170 put spread out in September. So we still have a little time on that put spread. There's still 40-something days left. And it's really worked out well. And the best thing that I could have done the last couple of days is what I've done, which was just leave the position alone and not mess with it. All right, now our screen's coming back up here finally, so that's good. So just to look at the position, if I get out of the way here, we can see just long 17 of the 180, 170 put spreads. I'm short 1 of the 120, 110 put spreads, but basically I need GameStop below 170 in 45 days, and we've been moving that direction for a while now, right? If we pull up the chart here, we can see, well, we were 170 just 3 sessions ago, but we seem to be moving lower. And so I'm just leaving the position. The farther away I get from 170, the more comfortable I feel. I've been messing around a little bit with selling some downside, but if this continues to keep going lower, I don't want to give up my profitability by trying to get cutesy with it and trying to collect a little extra by selling the downside. When you put on a position that is a condor or some sort of butterfly where you're basically selecting a section where the stock can be in, and if it goes too high or too low, it doesn't work, then it's hard to really root for the stock because you need to stay in a certain range. So if it starts to go lower, then it's okay, but if it goes too low, then you're in trouble. If it starts to go higher, then it's okay, but if it goes too high, then you're in trouble. It's really hard kind of to deal with that because in a sense, any way the stock moves is wrong for you because it's moving towards you being in trouble either way. So that's why sometimes I would prefer to have just a directional trade on than a trade where you need the stock to stay in a certain spot because just of that dynamic that anything that happens is bad. You know, when you're just short a straddle or something, the only days where you're not feeling under pressure are like on the weekends. Anyway, so let's back up and just take a look at this chart from a little bit higher point of view here. So if we go back to a year chart, we can see, if I get out of the way again, this chart still looks bullish if you look at a year chart, right? It's going, it still looks like it could be moving higher from here, and it certainly looks like there could be support kind of down here somewhere. But when I think of the fundamentals of what has happened here with this, we had this big short squeeze, then we had this second move up, and really this company's trying to reinvent itself, but that's a tough process, and it's certainly it's not a given that they're going to be the market leader reinventing themselves, right? That's a hard thing for a company to do, and certainly they've benefited from being able to raise some money with the stock price going. There are benefits to the fact that this stock has moved higher like this, and that there's been all this hype. They've been able to raise money. There's been a lot of attention to this company, et cetera, et cetera. However, most of the people that own this security right now are pretty short-term investors who were looking for a big bang. You can just tell that by looking through the comments in any of these groups. Most of the comments are like, "This is getting ready to go to 1,000." It's a lot of hyperbole. A lot of people making these claims that this is going to really move higher quickly. And those are not the kind of people that hang around for a real long time if this moves just sideways or down. So I can see this moving a lot lower before it's going to reach at some point, it's going to reach an equilibrium where the short, fast money people have mostly gotten out, and the people who are actually buying this company as an investment for the longer term are getting in. But certainly if I was a conservative investor looking for stocks to invest for the long term, I wouldn't pick this one at this price. Certainly not, because it doesn't feel discounted here at all, right? It feels like, wow, the stock went from 16, 19, all the way up to 400. Now it's 157. Is 100 the bottom? Is 50 the bottom? Who knows? Today could be the bottom. I can't tell the future. But it certainly feels like the majority of the short, fast money people have not gotten out of this one. It feels like it's still, the open interest, the long people that are long this are still mainly composed of the fast money, newer trader people who are looking for a quick buck. And until that changes, I think this will continue to erode lower. We'll see what happens. I've made money being shorted for a while, but I can't claim like any great claims because I'm essentially making back money that I lost in January and February, right? Because I was shorted from all the way down here, this second move. I was shorted from like $38 or something, right? So yeah, it's great that I've hung in there and that I've, stuck with my guns and made back money, but I still am not back to where I was before I initially shorted this. So I can't make any claims to be some sort of genius or something like that. And even if I had made money the whole time, I can't make claims to be some sort of genius because there's a lot of luck in the stock market and trading. And those who don't realize that and think that they actually have some sort of great skill are deceiving themselves and are in for a big fall. All right, so let's take a look at the VIX real quick. Really just kind of hanging in orbit there. Let me get out of the way here. Kind of off the lows. Kind of feels like we have shifted gears out of the whole pandemic thing, right? We've talked about this before, how the stock market for a long time was just coming off the pandemic. It looks like we may have kind of come off of that range now, and we could be moving into a new range here of trade and of the VIX moving around. I don't like to say trade because the VIX itself is not tradable. It's just a number that's based on a formula. So you could look at the VIX futures and talk about trading them, or you could look at Uvxy or VXX and think about trading it. But not the VIX is just a number, and you can't directly trade it. But caveats being said, it appears that we may be off of this, coming down from COVID thing here right now. And certainly, if you look at the news media right now, there is still a lot of COVID problems in the U.S. I saw that the number of new cases is reaching, certainly in Florida, is the highest it's ever been. COVID is still around for us a lot, but if you look at the stock market and the VIX, it's not reflected there, right? Let me move to the side here. There is concern about this stuff, but not by the market. The markets is not showing a whole lot of concern about the latest COVID thing, right? Look at the VIX. It's just, we are pretty close to the lows, right? and it's not like the VIX has turned around and moved back to 40 or something. So the market does not appear overly concerned about this COVID situation right now. And I don't know if before it was an overreaction or if now it's not enough of a reaction, but I guess part of it is probably just that the economy is opened and the effects on businesses of shutdowns and stuff are not happening right now. But as far as the nation's health and the threat to individuals, it seems like there still is a legitimate threat out there to people's health. So it's definitely something I would think to watch with the markets right now. But markets really pretty strong. Look at that chart right there, right? That's 2021 so far in the E-minis, which would represent the broad markets, and that looks real strong, right? There's the NASDAQ going straight up. So market's not overly concerned about anything right now, it looks like, right? Conversely, the meme stocks here is AMC. Really, we'll see if it can hold 30 here. It looks like it could test 30. CLOV after an initial pop, MVIS. And I was looking at NEO today. NEO's been moving around a lot, and it seems to me right now that I'm looking at NEO as a candidate for actually being long some premium. It just looks to me, just intuitively to me, it looks like it's moving around a lot lately, and that there is an opportunity here possibly to buy some strangles or strategically buy some puts or calls and catch a little movement on NEO here. Tell me what you think of that in the comments if you're watching here. Tilroy has obviously been a mentioned Reddit darling as of late, with it had this little spike up after earnings. But volatility remaining around 19, and I wouldn't be surprised if the VIX stays in a range between 16 and 20 for a while. We got very comfortable with the VIX being 12 and below in 2017, and thinking that was like the regular range, whereas we know that the long-term average of the VIX is closer to 20. So it doesn't seem all that surprising or all that unlikely that we stay in a little bit more elevated spot here between that 16 to 19 range for a bit now. However, that all being said, that doesn't mean that UVXY and VXX aren't going to decay. They certainly will continue to decay as we remain in contango. However, UVXY sticking to that 30, pretty close to that 30 level for a while now, right? Here's UVXY chart over the last, what is that, month maybe? 20 days. There's 20 days. Just kind of hugging that 30 level there, or going back and forth through it. I would suspect that we will lose that and move lower soon, but really the VIX firming up a little bit lately and not a whole lot of tradable action here. We did have that one spike a few weeks ago, which we were talking about. That was a great spot there, a great opportunity there, but in general, not for the longer term players, the move down really hasn't happened, right? This is 20 sessions, and we're kind of in the same spot we were 20 sessions ago. So obviously, the effects of contango are slow and take some time to attain, but we will see this move lower inevitably over time. Anyway, so that's it for me for the moment. I appreciate you all watching. We're trying to get some of the kinks out of what's been going on lately. What about Chinese-U.S. relationship impact on NEO? That's a good question, and one that I'm not completely qualified to answer that. But that is definitely a good question and something that I'm gonna do a little research on and get back to you on. Thanks for that comment though. I was trading NEO. It's kind of upsetting because I was trading NEO back when it was way lower, and I was actually long it for a while when it was down around. I think it reverse split actually. but when it was down around $4 before the split, I believe it did reverse split, or I'm sorry, yeah. And I was also trading Candy. If we pull up Candy here, which is still around $5, but yeah, I was trading this one for a while. Wow, that got up to 17 earlier this year. And these two players have been somewhat obviously overshadowed by Tesla as car manufacturers. However, NIO's pretty popular one lately, and is certainly has had a lot of interest, especially after this big run up that we saw in 2020. Yeah, this I don't know. Maybe I had the wrong chart in before, but anyways, yeah, this is where I was trading it down here. I guess it didn't reverse split or anything, and I was long it for a while. Nothing was going on, and then during this period here in 2019, where it started to move lower and lower, I finally gave up on it. And of course, soon after I gave up on it, it went flying higher, which is so typical with trading. But yeah, it's been moving around a lot, and I think there's certainly opportunity here. I wouldn't want to be short a lot of premium at this level. If we look at the volatility in the 70s here, and if we go to a chart and then we chart and we look at the actual volatility, let's get rid of whatever's on here right now. Chart settings. So volatility in the 70s, which, once we've been looking at GameStop and these other stocks with vols over 100 sounds low, but that's actually pretty high for a stock, obviously. But let's go to a volatility study here. Historical volatility. And see what we see. So it looks, according to the bottom of the chart here, if I get out of the way once again, it appears volatility was actually moving around more back in 2020 than it is now, and actually it has been moving a lot less lately. So thus the option volatility, I would think, has also come in a lot. That's what this chart shows, right? You can see it being up around here. This shows 1.5, so 150 vol up here in the middle of 2020, and you can see it tailing off here down to like 50 vol or something like that. So, and so this is the actual volatility. Options will either lead that or follow that to some extent, but if it looks like, I don't know, it just intuitively felt like a buy for volatility here. For options pricing is lower than it has been. And another way we can look at this is just to go into the options here and look at statistics. And we can see that we're currently in the 23rd percent, which means that options prices are cheap relative to their average. IV percentage 16. So once again, options prices cheaper than they usually are. And in my mind, might be an opportunity to buy some sort of option in there. We'll have to take a look. Anyway, I'm going on longer than I wanted to. Once again, I'm going to let you go as we come into the open. It's 9:27 here in Cape Cod, Massachusetts, home of the Pilgrims. And I hope you have a great rest of your day. I'm going to practice some guitar today, I believe. Thanks for watching, and we'll see you next time.